This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending January 8th, 2022. Our question this week is, was there a Christmas rally? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average decreased minus 0.01% on Friday and was down minus 0.29% for the week. The S&P 500 decreased minus 0.41% on Friday and was down minus 1.87% for the week. The Nasdaq decreased minus 0.96% on Friday and was down minus 4.53% for the week. Looking at the week, we can see that there were 4 up finishes versus 11 down finishes for the major indexes. On Monday, all the major indexes ended up. On Tuesday, the Dow Jones Industrial Average ended up, while the S&P 500 and the Nasdaq ended down. On Wednesday, Thursday, and Friday, all the major indexes ended down. The new unemployment claims were 207,000 versus 195,000 expected. A record 4.5 million workers quit their jobs in November. In December, payrolls rose by only 199,000 versus 422,000 expected. The U.S. 10-year Treasury yield topped 1.75% on Thursday. U.S. oil topped $80 per barrel on Kazakhstan unrest, and the Fed released the minutes from their December meeting. New unemployment claims, the number of workers quitting their jobs, U.S. payroll increases, changes in the U.S. 10-year Treasury yield, U.S. oil topping $80 per barrel, and the release of the Fed's December meeting minutes are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. Was there a Christmas rally? The Christmas or Santa Claus rally is the tendency of the stock market to rally or go up during the Christmas season. It occurs during the last 5 trading days of December to the first 2 trading days of the new year. This Christmas season was from close on December 23rd, 2021 to close on January 4th, 2022. SPY, which is an S&P 500 ETF, closed on December 23rd, 2021 at $470.60 and closed on January 4th, 2022 at $477.55, a gain of $6.95 or 1.48%. So, yes, there was a Christmas rally of 1.48%. A person could have simply traded for the week of the Christmas rally period and gained 1.48%. Or since the market normally sells off for tax purposes in November and December, a person could have invested in SPY for the month of December by buying SPY at the November 30th, 2021 close price of $453.97 and gain 5.19% by January 4th, 2022. Thus, $10,000 would have become $10,519. If you only had or wanted to risk $1,000, it would have become $1,051.90. And if you had $100,000 to invest in SPY, it would have become $105,109. Did you participate in the Christmas rally? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you how to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending January 8th, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Royal Caribbean Group, ticker symbol RCL. It's in the third column. It increased 5.36% for the week and was up 3.98% on Friday. RCL is a cruise line company with cruises worldwide. They operate cruises under the Royal Caribbean International, Celebrity Cruises, Azamara, and Silver Sea Cruises brands, which comprise a range of itinerary that call on approximately 1,000 destinations throughout the world. Looking at a summary of results, you can see that RCL has increased 5.36% year to date, which is the same as the increase for the week because it is the first week of the year. I did not trade RCL this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY at the beginning of 2022. The Southside portfolio is down minus 9.45% versus minus 1.87% down for SPY, a difference of 7.58%. The Southside is losing to SPY by more than 7.5%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin continues to be in a bear market. Will Bitcoin rise in 2022? Stay tuned to find out what happens to Bitcoin and the Southside portfolio, which will remain heavily invested in Bitcoin. The portfolio is 81.57% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 17.54% of the portfolio. Cash is 0.89%. The cash flow generated for this week was 0.35% of the portfolio account value. The account value changed by minus 9.5%. Meanwhile, the S&P 500 ETF changed by minus 1.87%. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $323.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.